Based on the historical data and forecast, Bitcoin demonstrates a clear uptrend. The price has been consistently climbing, supported by the Bollinger Bands, which are generally widening, indicating increasing volatility and potential for further gains. The RSI fluctuates but generally stays within a range, suggesting that the asset is not currently overbought or oversold. Considering the forecast for the next week predicts continued upward momentum, with prices reaching $102,200, a bullish strategy is warranted. We will implement a combined strategy leveraging RSI and Bollinger Bands. Our strategy begins with an entry at $91,300. The stop loss will be set at $92,600, just above the established support level, to protect against a potential pullback. The initial target price is $95,400, aligning with the recent high and the upper Bollinger Band. If the price reaches $95,400, we will move the stop loss to $94,400 to secure profits and reduce risk. Subsequently, if the price continues to rise as forecasted, reaching $99,900 and then $102,200, we will adjust the stop loss accordingly to lock in profits and ride the upward trend, ultimately targeting a final exit at $102,200. This approach combines the momentum of the upward trend with risk management techniques, aiming for high returns while minimizing potential losses. Based on the historical data and forecast, Ethereum shows a generally upward trend, with recent fluctuations. The RSI values hover around the 50 mark, indicating a neutral market sentiment, but have recently pushed above 65, suggesting a potential overbought condition. The Bollinger Bands have been widening, indicating increased volatility. Considering the support price of $3,000 and the forecast prices, I recommend a long position strategy. Entry price will be $3,210, with a stop loss set at $3,090 to protect against potential downside risks. The target price will be $3,380, aiming to capitalize on the anticipated upward movement. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, we will enter a long position at $3,000. The stop loss will be set at $2,820, and the target price will be $3,240. Conversely, when the RSI exceeds 70, indicating an overbought condition, we will consider taking profits or reducing exposure. Combining both strategies, a weighted portfolio is suggested, with 60% allocated to the initial long position at $3,210 with a target of $3,380 and a stop loss of $3,090, and 40% allocated to the RSI-based strategy, entering long at $3,000 when RSI is below 30, with a target of $3,240 and a stop loss of $2,820. This blended approach aims to maximize potential returns while mitigating risks. Based on the historical data and forecast, XRP shows a slight upward trend. The RSI consistently fluctuates but generally stays within a range, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for price movement. Considering the support price of $2.11 and the forecast for the next week, I recommend a long position strategy. We will implement an RSI-based strategy with an entry point when the RSI dips below 30, a stop loss at the support level of $2.11, and a target price of $2.36, which is the recent resistance level. To refine this strategy, we'll incorporate Bollinger Bands. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. Let's enter a long position at $2.13. Our stop loss will be set just below the support level at $2.09 to protect against sudden downturns. The initial target price will be the recent resistance level of $2.36. If the price reaches this target, we can consider moving the stop loss to break even to secure profits and potentially ride further upward momentum. The portfolio will prioritize the RSI strategy with a slight modification based on Bollinger Bands, as it provides a more dynamic and responsive approach to market fluctuations. Based on the historical data and forecast, BNB shows a clear uptrend, consistently bouncing off the support level of $936. The The RSI indicator has been fluctuating but generally trending upwards, with recent values above 50, suggesting increasing bullish momentum. The Bollinger Bands have been widening, indicating increased volatility and potentially stronger price movements. Considering this, I propose a long position strategy with an entry price of $931, placing a stop-loss order at $906 to protect against a potential pullback. The initial target price will be $971, aligning with the forecast price and the upper Bollinger Band. To enhance the strategy, I recommend a dynamic approach, adjusting the target price based on further price action. If the price reaches $971, consider moving the stop-loss to break even at $931 and setting a new target price of $996, based on the forecast for January 20, 2026. This strategy combines the strength of the uptrend, RSI momentum, and Bollinger Band volatility to maximize potential returns while managing risk effectively. This approach prioritizes capturing the upward momentum while safeguarding against unexpected downturns. Based on the historical data and forecast, Solana shows a clear upward trend. The price has consistently tested and bounced off the support level of $140, and the forecast predicts further gains. The RSI, while fluctuating, has generally remained above 40, indicating a bullish sentiment. Considering the Bollinger Bands, the price is currently near the upper band, suggesting a potential pullback is possible, but the overall trend remains positive. Therefore, I recommend a long position strategy. We will enter a long position when the RSI falls below 40, specifically at $142. The stop-loss will be set just below the support level at $138 to protect against a potential downturn. The initial target price will be $150, aligning with the forecast and the upper Bollinger Band. To maximize returns, we will implement a dynamic trailing stop-loss. Once the price reaches $150, we will adjust the stop-loss to $145. If the price continues to rise, we will further increase the stop-loss to $151. This approach allows us to secure profits while giving the trade room to breathe. If the price reaches $155, we will take partial profits, securing 50% of the position at $155 and letting the remaining 50% run with a trailing stop-loss. This blended strategy combines the benefits of trend following with risk management, aiming for substantial returns while protecting capital. Based on the historical data and forecast, TRON shows an overall upward trend with recent volatility. The RSI consistently fluctuates above 50, indicating a bullish momentum, although it occasionally approaches overbought territory. The Bollinger Bands suggest that the price is currently near the upper band, which may indicate a potential pullback or consolidation. Given this information, I propose a strategy combining RSI and Bollinger Bands to capitalize on the upward trend while mitigating risk. My strategy involves a long position entry at $0.306 on January 14, 2026, coinciding with the forecast price and the upper Bollinger Band proximity. A stop-loss order will be placed at $0.298, just below the support level, to limit potential losses. The initial target price is set at $0.319, aligning with the forecast price on January 19, 2026. If the price reaches this target, consider taking partial profits and adjusting the stop-loss to break even. A second target price of $0.323 will be set for January 20, 2026, to capture further upside potential. This blended approach combines the momentum signals from the RSI with the volatility indicators from the Bollinger Bands, aiming for high returns with controlled risk. Based on the historical data and forecast, Dogecoin shows a slight upward trend with some volatility. The RSI consistently fluctuates between 48.7 and 65.2, indicating neither strong overbought nor oversold conditions for most of the period. However, on December 31, 2025, the RSI was 32.0, which suggests a potential oversold opportunity. The Bollinger Bands show that the price has been oscillating within the bands, with recent movement towards the upper band, hinting at bullish momentum. Therefore, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on potential upward movement while mitigating risk. My proposed strategy is to enter a long position at $0.143 when the forecast price is $0.143. Set a stop loss at $0.141, just below the support level of $0.142, to limit potential losses. The initial target price is $0.152, aligning with the forecast price on January 20, 2026. If the price reaches $0.152, consider moving the stop loss to the entry price of $0.143 to protect profits and potentially ride further upward momentum if the price continues to rise. This combined approach leverages both the RSI and Bollinger Band signals for a balanced and potentially high-return investment. Based on the historical data and forecast, Cardano has shown a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 50 mark, indicating indecision in the market. However, the recent RSI values have been trending upwards, suggesting a potential shift towards a bullish momentum. The Bollinger Bands have been widening, indicating increased volatility and potential for price breakouts. Considering the support price of $0.414 and the resistance price of $0.436, and the forecast prices trending upwards, I recommend a long position strategy. My strategy involves entering a long position when the RSI dips below 30, which would be around $0.328. The stop loss will be set just below the support level at $0.327 to limit potential losses. The initial target price will be set at the resistance level of $0.436. If the price reaches this target, we will move the stop loss to the entry price of $0.328 to protect profits. If the price continues to rise, we can consider a second target price of $0.436 plus $0.01, with a trailing stop loss adjusted accordingly. This strategy combines the RSI oversold signal, Bollinger Bands volatility, and key support and resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a mixed trend with periods of both upward and downward movement. The support price consistently remains at $593, while the resistance fluctuates around $649. The RSI values have been oscillating, with recent readings indicating a slightly oversold condition, hovering around 50 to 55. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $606, placing a stop-loss order at $593 to protect against a potential downside breakout. The initial target price will be $630, aiming to capture a reasonable profit. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI crosses above 50 while the price remains within the lower Bollinger Band, it signals a potential upward movement. In this case, we will adjust the target price to $643. If the price breaks above the upper Bollinger Band, it indicates strong bullish momentum, and we will consider raising the target price to $654. However, strict adherence to the stop-loss order at $593 is crucial to mitigate potential losses. This blended approach combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Wrapped Beacon ETH shows a generally upward trend, with recent volatility. The RSI values fluctuate around 50, indicating neither strong overbought nor oversold conditions, but the recent increase suggests a potential bullish momentum. The Bollinger Bands have been widening, indicating increased volatility, and the price has recently touched the upper band, further supporting a bullish outlook. Considering these factors, I recommend a long position strategy with a focus on capitalizing on the anticipated upward movement. We will implement a strategy that combines RSI and Bollinger Band signals for enhanced precision. The entry price for this long position will be $3,490, coinciding with the start of the forecast period. The stop loss will be set at $3,440, just below the recent support level and the lower Bollinger Band, to mitigate potential losses if the price reverses. The initial target price will be $3,580, aligning with the forecast high and the upper Bollinger Band. If the price reaches $3,580, we will move the stop loss to the entry price of $3,490 to secure profits and allow for further upside potential. If the price continues to rise and breaks above $3,580, a secondary target price of $3,680 will be set, based on the forecast high. This strategy aims for a high return by leveraging the predicted upward trend while managing risk through strategic stop-loss placement. Based on the historical data and forecast, Bonk shows a slight upward trend. The RSI has been fluctuating, recently crossing above 60, indicating strengthening momentum but not yet reaching overbought territory. The Bollinger Bands have been widening, suggesting increased volatility. Considering the support price of $0.00000990 and the resistance of $0.00001890 and the forecast prices, I recommend a long position strategy. We will enter a long position when the price touches the support level of $0.00000990. The stop loss will be set just below the support level at $0.00000970 to protect against a sudden downturn. The initial target price will be the resistance level of $0.00000189, offering a substantial profit potential. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI dips below 30 near the support level, we will wait for confirmation of a bounce before entering. If the price touches the lower band of the Bollinger Bands near $0.00000990, it signals a potential buying opportunity. If the price breaks above the upper band of the Bollinger Bands, we will consider taking partial profits and adjusting the stop-loss higher. The final portfolio will be a combination of these strategies with the entry price of $0.00000990, a stop-loss of $0.00000970, and a target price of $0.00000189. This approach balances risk and reward, capitalizing on the upward trend while mitigating potential losses. Based on the historical data and forecast, Ethena shows a slight upward trend with some volatility. The RSI indicates that the asset is currently in a neutral to slightly oversold territory, fluctuating between 40 and 60. The Bollinger Bands suggest periods of consolidation and potential breakouts. Considering these factors, I propose a strategy combining trend following and mean reversion. We will initiate a long position when the price touches the support level of $0.2 and the RSI dips below 30. The entry price will be $0.2. A stop loss will be placed just below the support level at $0.19 to protect against a potential downside reversal. The target price will be set at $0.28, the resistance level, aiming to capture a significant portion of the potential upside. To refine the strategy, we'll incorporate the Bollinger Bands. If the price is near the lower band and RSI is below 30, it strengthens the buy signal. If the forecast indicates a price above the center of the Bollinger Bands, it further confirms the upward trend. For example, on January 14, 2026, the forecast price is $0.228, and the RSI is expected to be around 40. We will enter a long position at $0.2, set a stop loss at $0.19, and target $0.28. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Injective exhibits an overall upward trend with periods of consolidation. The RSI fluctuates between 32.7 and 61.1, indicating oversold and overbought conditions. The Bollinger Bands show periods of contraction and expansion, suggesting volatility shifts. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. The primary strategy will be a long position. We will enter a long position at $5.23 when the forecast price starts. The stop loss will be set at $5.03, coinciding with the established support level, to mitigate potential losses. The initial target price will be $5.69, aligning with the forecast price for January 20, 2026. To refine this strategy, we will incorporate Bollinger Band signals. If the price touches the lower band, it indicates an oversold condition, reinforcing the long position. Conversely, if the price approaches the upper band, it suggests an overbought condition, prompting us to consider taking partial profits at $5.42 and $5.49. We will maintain the long position until the price reaches $5.69 or until the RSI reaches 80, signaling an overbought condition, at which point we will fully exit the position. This combined approach aims to capitalize on the upward trend while managing risk through strategic stop-loss and target price levels. Based on the historical data and forecast, Pudgy Penguins demonstrates a clear upward trend. The price has consistently moved above the Bollinger Band center, indicating bullish momentum. The RSI values, while fluctuating, generally remain above 50, further supporting this trend. The forecast for the next week predicts continued growth, with prices reaching $0.0142. Considering the support price of $0.012 and the resistance of $0.0212, I recommend a long position strategy. We will enter a long position at $0.0125. The stop loss will be set just below the support level at $0.0119 to mitigate potential losses if the price reverses. The target price will be set at $0.0142, aligning with the forecast high for the week, offering a substantial profit opportunity. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 30, oversold, we will consider an entry point at the prevailing price, with a stop loss just below the lower Bollinger Band and a target price near the upper Bollinger Band. Conversely, if the RSI exceeds 70, overbought, we will consider a short position, with a stop loss above the upper Bollinger Band and a target price near the lower Bollinger Band. However, given the prevailing bullish trend, the primary strategy remains a long position with an entry price of $0.0125, a stop loss at $0.0119, and a target price of $0.0142. This portfolio combines the strengths of trend analysis, RSI signals, and Bollinger Bands, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Dogwifhat shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates above 50, indicating a bullish sentiment, although it has recently dipped below 60. The Bollinger Bands suggest that the price is currently near the upper band, indicating a potential for a pullback. Considering these factors, I recommend a long position with a conservative approach. Entry price should be $0.386, placing the stop loss at $0.37, just below the support level, to mitigate potential losses. The initial target price is $0.428, aligning with the forecast for January 20, 2026. To refine the strategy, I propose a dynamic approach incorporating RSI and Bollinger Bands. If the RSI falls below 30, signaling an oversold condition, consider a second entry at $0.386 with a tighter stop loss at $0.375. Simultaneously, if the price touches the lower Bollinger Band, it signals a potential buying opportunity. The target price for this second entry should be $0.449, leveraging the potential for a rebound. This combined strategy aims to capitalize on both bullish momentum and potential pullbacks, maximizing returns while managing risk effectively. Based on the historical data and forecast, Pepe shows an overall upward trend with periods of consolidation. The RSI consistently moved above 50, indicating bullish momentum. The Bollinger Bands show that the price has been fluctuating within the bands, with recent prices approaching the upper band. The forecast data suggests a continuation of this upward trend, with prices expected to reach $0.0000720. Considering the support price of $0.0000580 and the resistance price of $0.0000720, I recommend a long position. My strategy is to enter a long position at $0.0000640. The stop loss will be set at the support price of $0.0000580 to limit potential losses. The target price will be the resistance price of $0.0000720, aiming for a significant profit. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize returns while managing risk. The portfolio will allocate 60% to this strategy, 20% to a conservative strategy that buys when the RSI is below 30 and sells when it is above 70, and 20% to a Bollinger Band strategy that buys when the price touches the lower band and sells when it touches the upper band. Based on the historical data and forecast, Celestia shows a recent upward trend, bouncing around the support price of $0.53. The RSI has fluctuated between 37.2 and 62.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened recently, suggesting increased volatility. Considering the forecast prices, which anticipate a continued upward trajectory, I recommend a long position strategy with an entry price of $0.568. A stop loss should be set just below the support level at $0.528 to protect against a potential downside reversal. The initial target price should be $0.617, aligning with the highest forecast price. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we can consider entering a long position at that level. Conversely, if the RSI reaches 80 or higher, suggesting an overbought condition, we could consider taking profits or tightening our stop loss. If the price touches the bottom of the Bollinger Bands, it signals a potential buying opportunity. If the price touches the top of the Bollinger Bands, it signals a potential selling opportunity. Combining these signals, I suggest a tiered target approach. The first target remains $0.617. If that is reached, we can set a second target at $0.65, the resistance level, with a trailing stop loss adjusted to the center of the Bollinger Bands. This combined strategy aims to maximize potential gains while mitigating risk. Based on the historical data and forecast, Internet Computer shows a generally upward trend, recently breaking through the resistance level of $3.42. The RSI is fluctuating, but the recent value of 62.0 indicates an overbought condition, suggesting a potential pullback. The Bollinger Bands have been widening, indicating increased volatility. Considering these factors, I recommend a strategy that combines elements of all three indicators. Initially, I suggest a cautious entry at $3.27, coinciding with the first forecast price and a slight pullback from the recent high. A stop loss should be placed just below the bottom of the Bollinger Band on January 14, 2026, at $2.74 to limit potential losses. The initial target price will be set at $3.45, aligning with the upper Bollinger Band on January 14, 2026. If the price reaches the target price of $3.45, I recommend taking partial profits and tightening the stop loss to $3.35, near the center of the Bollinger Bands. If the price continues to rise, a second target price of $3.58 can be considered, based on the forecast for January 20, 2026. However, given the overbought RSI, a conservative approach is warranted. If the RSI falls below 40, consider exiting the position or reducing the size of the position to mitigate risk. This combined strategy aims to capitalize on the upward trend while mitigating the risks associated with overbought conditions and increased volatility. Based on the historical data and forecast, Optimism shows a clear upward trend. The RSI consistently moved above 50, indicating positive momentum, and recently reached 70.5, suggesting a potential overbought condition. The Bollinger Bands have been expanding, confirming the increasing volatility and upward trajectory. Considering the forecast for January 14, 2026, to January 20, 2026, the price is predicted to rise to $0.376. Therefore, I recommend a long position with an entry price of $0.309. A stop loss should be placed at $0.361, just below the support level, to mitigate potential losses. The initial target price is $0.334, aligning with the first forecast price, with a secondary target of $0.376 for maximizing profits. To refine this strategy, we'll incorporate a dynamic RSI-based exit. If the RSI exceeds 80, consider taking partial profits to secure gains. Conversely, if the price touches the upper Bollinger Band, it may signal a potential pullback, prompting a partial exit or a tightening of the stop loss. This combined approach, blending trend analysis, forecast data, and technical indicators, aims to capitalize on the upward momentum while managing risk effectively. The portfolio will prioritize the long position on Optimism, allocating 70% of the capital, with the remaining 30% held in reserve for potential adjustments or alternative opportunities. Based on the historical data and forecast, Dash shows a strong upward trend. The RSI has been fluctuating, but recently crossed above 70 on January 13, 2026, indicating an overbought condition. However, the forecast for the next week predicts continued price increases, reaching $57 by January 20, 2026. Considering the support price of $56.5 and the resistance price of $68.9, I recommend a long position. The entry price should be $45.5, with a stop-loss order placed at $42.2, just below the lower Bollinger Band. The initial target price should be $52.3, aligning with the forecast and the upper Bollinger Band. To maximize potential gains, I suggest a tiered target strategy. After reaching $52.3, consider moving the stop-loss to break even to protect profits. The next target price would be $57, based on the forecast. If the price reaches this level, a partial profit taking is advised, securing some gains while leaving the remainder of the position open for further upside. The final target price is the resistance level of $68.9, where the entire position should be closed, securing maximum profits. This combined strategy leverages RSI, Bollinger Bands, and forecast data to create a high probability, high reward investment opportunity.